Good morning, traders. Welcome to the Wednesday webinar. I'm Todd Gordon of Trading Analysis. It's July 3rd, one day before the 4th. So happy 4th of July if you are in the U.S. If not, wish us a happy 4th. I'm getting a little patriotic today. My partner was in there. If you guys know, I'm also involved in a distilling company. We're releasing our canned cocktail. Ryan's going to go get a few for us. We're not going to drink. It's a little early, but showing the company and the country's colors here. That's why I'm a little informal. But let me just make sure we're rolling and we're good. Looks like YouTube is behaving as expected. Good morning. Guys, let me know. Sound okay? No echo or anything like that. Good morning, Michael, Ziad, R. Oleg, good morning. Good morning. All right. So let's see, guys. What's happening? You know, it's interesting. We're getting a pretty good move up in gold and bonds here this morning. If you notice, they're kind of buying everything here. So it looks like there's some renewed trade tensions, not with China, but now they're focusing on European Union, sort of this airline subsidy kind of thing. So there's still trade concerns, which is pushing gold up. We have obviously a central bank meeting here on July 31st, and we have non-farm payroll after the 4th of July. I have a feeling that's going to be a rather uneventful trading session. But there's a lot happening. And then we have earnings coming up here, which is amazing. We're already coming back into earnings season. So there's a few things I want to take you guys through. But again, comments, questions, throw them in there. I've got them up right in front of us so we can see, what you guys would like to cover here. So just let me know if there's markets you would like to see. As we normally do here, we have the entire trading analysis team. Alex, please push your camera a little to the right again. And there he is. Good morning, trading analysis team. How are you guys?
Good morning.
Hey guys, how's everybody doing today?
All right, Alex and Terry, the terrible trading trio here for you on Wednesday morning. Guys, what's happening today?
Yeah, I got my cup of joe here, just getting ready for an exciting day.
Yeah. Alex has been busy on the crypto side, kind of running the show. If you guys are following us on Twitter, Alex and Terry kind of tag team the crypto markets, which they've been trading extremely well. They've also been doing a lot on the Forex side, so we're going to bring those guys in. I know Terry has a wave count in a certain large networking company that's also a cloud player as well. We're going to show that. So let's just kind of take it from the top here. And bring in some charts. We usually start with the indexes, guys. I mean, that's just kind of how I was taught to trade, is you always take a top-down approach, right? So you just have an idea where the broader indexes are going. You then drill down to figure out strong sectors, below that industry groups, and below that the strong and weak stocks that you want to play. If you have a bullish index, you want to find a strong sector and then get down into the stocks. So I always just kind of start my day that way, and here's what we're looking at here in the S&P. This has been one of our main wave counts here for some time. In fact, let me back out off this half-day chart to the one-day. We are still bullish for now. We do still see a 5-wave move pushing up above 3,000. That is the near term. The longer term. The near term, there's something that I do want to discuss with you guys here real quickly, which is a little bit of a concern. If you get off of this daily chart, down into the 195-minute chart, we're at kind of an unusual juncture here. This move higher, okay, is really hard to count as a 5-wave move. All right, if you're putting a wave 2 on here, this is a 4. It's a little bit of a dodgy count. You really have a hard time saying that this is anything but a 3. But out of respect for this trend, okay, fine, let's go with it. All right. So then you set down in 2, a very, very shallow wave 2. Okay, fine, let's go with it. Then we move up, we get above 29.54. This was the all-time high. All right, off of the 195-minute chart, let's get down to the intraday. And just to tease us a little more, we go 29.90 bid, sell back down to the all-time high 29.54, and then we do another little freaking shallow wave 2. I'm like, are you guys trying to tell me that, you know, we're doing a specious 5-wave move in 1, shallow green 2, and another shallow orange 2 of green 3, and we're about to do a third of a third higher? And if this is the way they want to play it, fine. You know, in our portfolio, I've got the least amount of cash on hand that I've had life to date in the portfolio. We're fairly long in the options market, though I'm looking to get a little bit more conviction that this is going to be the likely path, and we will certainly leverage up. And we're about to get out of this consolidation, because you don't want to be, unless you're kind of doing delta neutral, theta positive trades, you don't want to be long premium, because you're going to be getting chopped up in here. So once we have evidence that we're about to move into an impulsive third, we will leverage up in the options market. Here's the other concern. Let me go to the alternate count here in the S&P. Here's the other concern. Actually, you know what? Let me do this. Let me do this in the Nasdaq. Here's the other concern. The Nasdaq has not made a new high, okay, above April 29th. The Nasdaq is lagging, despite the fact that semis have come on so strong. You know, SMH has held a low. You know, you've got AMD trying to break a 20-year downtrend. You've got NVIDIA doing a double bottom. You know, you've got guys like Xilinx and other chips that are really doing a lot of heavy lifting, and they're moving up, obviously, on the hopes of a Chinese resolution with trade tariffs. But yet the Nasdaq can't get above the old high. So obviously, FANG continues to weigh on the broader Nasdaq. Within that, if you look at this, kind of that same concern that I showed you guys on the S&P, unless you're telling me the Nasdaq is doing a 1-2, 1-2, and another 1-2, so we're going to rip higher in a third of a third here in the Nasdaq. I mean, we have a lot of things coming up here, so it could be possible, but I can't help but think, is that a completed 5-wave move, and we're about to get this. Okay, so this is this June rally is rather troublesome for me. Again, I hope you understand what I'm saying. I don't know if I have that alternate count. Yeah, just like this. This would be the 1-2, 1-2, and we're about to rip higher in a third of a third. If that's the case, you know, we're about to tack on 400 to 500 Nasdaq points, a 5% rally in the next, what, 3 weeks? No, maybe. The other problem that I have here, and sorry I look like, you know, I'm landing an airplane, we have to, so we avoid the echo. I don't know where my little Apple iPods are. My kids stole them. The other problem that I have here, guys, is the Russell small caps continue to underperform. They're riddled with these zombie companies that'll never be profitable. But again, we clearly haven't taken out the highs at all in the Russell. We're well off the highs in the small caps from September. We haven't even taken out the May highs. And if you kind of look at this structure, this ABC structure, you know, into the 786 retracement, in a place where the Nasdaq and the S&P are trying to tell us that we're going to rally in a third of a third and possibly third of a third of a third, and you get the rut 3 waving into the 786 retracement of the May to June drop, I'm like, I don't know about this. I don't know if we're ready to make the run. I do think we ultimately will make the push higher, but this is kind of why, you know, we're continuing to be long on the stock side, but on the options side, we're very measured, because you got the Russell and the Nasdaq trying to convince us that we're not ready to go to new highs, but you have the S&P and the Dow, which the Dow is, you know, being propped up by, you know, a lot of the same sectors that are pressing the S&P higher. So, you know, the Dow looks fine. The Dow looks great. So you have the tail of 2 strong indexes and the tail of 2 lagging indexes. So that's kind of the concern that I'm having from that point of view. And then you know,
in an ideal world, you'd like to have all 3 of the indexes pushing to new highs and tracking together. So now it's a selective market, I believe, and you need to pick and choose carefully. And watch those red flags that are signaling that not all of the market is participating in this huge rally.
Yep.
I do like the fact, though, that the S&P did bounce above that all-time high.
Right.
It shot up above
Right.
it, and when
Right.
it came back down, it bounced on it and bounced off, kind of like bouncing off the atmosphere, skipping across a pond. So that's possibly a good signal. Now that we do need to, I would like to see more of the tech sector start to rally. I think a lot of that has been the pressure in the Chinese markets with the trade tensions.
Yep.
Maybe we'll get some relief here, and we'll see if that goes. So
Yeah.
that was the one stock that kind of caught my eye, member of the tech sector, and it certainly has taken a big leap. So
Yeah.
we'll get around to talking about that.
Yeah. And then, Larry brings up a good point there. What about the transports? And, I could see the transports having resolution. Your point is well taken, Larry, that we're definitely underperforming in the transports. I can't help but think we may have just done an expanded flattened wave 2, and they're ready to go. But that same discussion that we just had about the Russell and the Nasdaq, I have a feeling if we look inside of this little move from May up to July, get off the weekly, down to the daily, you're going to, actually, let's go even a half day. You're going to have a hard time counting that as a 5. Yeah, it's specious, right? Maybe a leading diagonal down into, and again, are we doing 1, 2, and we're going to do, oops. So 1, 2, oh, I know what's happening. I got to uncover that degree. So, are we doing a third wave? Are we about to rip higher in wave 3? And that's the only way that you're going to start to see the transports play a little bit of catch up there. Okay. But good point there. Tesla, it's funny, Yuri. I just got done doing the members video, and I'll show you Tesla. Let me put it on the list. It's something interesting. And by the way, I didn't even look at the news. I almost don't want to know the news. But why is Tesla up 7.5% this morning? Will somebody just tell me? I just think I'm almost sick of hearing Tesla news. If I could filter out all Tesla news and just trade it technically, I think we'd all be so much better off. But let me put that in the list here today. Alex. All right. So the other market that I want to take a look at here is why are they buying everything this morning? They're buying stocks, they're buying gold, they're buying crude, and they're buying bonds. Let's just buy everything. Why not? So bonds are moving up. We have a TLT position on that's it's kind of a call butterfly, slightly positioned on the downside. It's not really working, and I'm about ready to cut this thing. Let me go to my options account, trade TLT. We have this 33, 30, 27 put fly. It's got negative delta. I'm throwing a little bit of money on this, and I'll show you why we have that trade on and why we'll probably manage it. And the fact that we can't really fight this uptrend just yet. So here's the butterfly. It's just a balanced butterfly. Plus we have an iron condor on just for fun. But we're looking for TLT to kind of back up into the 130 mark. Max profit would be obviously a 130 pin, risking $1,000 on either side to potentially make $2,200, which would be max profit. But the reason that we have that trade on is there's a lot going on in this chart. This is the 30-year bond on the right scale, and this is the TLT ETF on the left scale. And it's not a perfect overlay, but you can see that we're moving into what you'd expect wave 3 to find resistance. So this right here is your typical wave 3 projection, 161% relationship of 1 versus 3. And that's at 157, 158 in the bonds, 135 in TLT. Whatever indicator you look at is definitely going to give you momentum divergence up here in the bond market. Here's RSI, clearly seeing divergence as we're moving into fib resistance. We're long overdue to get this wave 4 drop, and that's what we're trying to play with this TLT, trying to get down to the 130 mark. There's TLT 130 on the left scale. We're just looking for a little wave 4 sell-off, which again, here is that position. We're about to cut it. And that's fine. And I don't care if we lose money on it. It was a well-planned trade and no big deal. The reason I really don't care is because we have a market that is very correlated to it also working. We've done, quite a few promotional videos, patting ourselves in the back. Hopefully, if you're not a member, you get our point. We're trying to say, look how cool we are for putting the trade on. But the gold market is ripping on the upside. Gold has almost broken the highs back from 2013. It certainly broke the 2016, 2018 highs, and gold is going. So the trade that we have going here, and I'll show you what we're going to do with this one, GLD. Let me go like this. Let's go monitor account statement. Let's go GLD. I'll show you the trades we did in this guy. We're going probably back, I don't know, 30 days in GLD. So back on June 11th, we bought the 125, 128 call spread. I think we talked about this trade last week. So June 11th was right here. So we basically bought the Wave 3 consolidation, or Wave 4 consolidation for this move up. We took half profits. Actually, we extended the upper strike. We closed the 128 short strike and did a new 128.32 call debit spread to leave us a 125, 132 call spread. I took half profits on June 20th, June 26th, excuse me, right there, June 26th, and now we've gotten a really sharp move up last night. And if we get down to the 195-minute chart here, I'm a little concerned that, we might need to get out of the rest of this gold trade, because if this is a good wave 2, you should retrace 38%, maybe 50%. So even though I like the way gold is acting, this is a really shallow wave 2. I probably will book the balance of the profits on the open today. Altogether, it's been a pretty big winner for us. We're up, I don't know, over 3,000. Initial risk was 500 on the trade. So, it's been good. So, as it ties back for gold, I am concerned about bonds continuing to go up into the wave 3. Gold, I think this is likely a B wave. And the other problem, and Alex, I'm going to bring you in here on the Forex market quickly. Are you ready for FX?
Yeah, sure.
Okay. And look, gold's selling off right now, 14.18. Why is the dollar not selling off? So you've got dollar slightly stronger, gold stronger, crude stronger, bond stronger, and stock stronger. All right. I mean, hopefully Bitcoin's stronger and they're just buying everything here. So, the dollar should be selling off here, and it's not. So I think, for those reasons, guys, we're probably going to take those gold trades. I know that doesn't help you if you're not in the trade with us. But, if the outlook, maybe perhaps we would say don't chase the gold because it is overbought. We'd really like to see that dollar start to sell off. Alex has been trading on our Forex side a lot of the commodity-based currencies against the dollar. He's got some good stuff showing. So just take a couple minutes, Alex, if you don't mind, and show us what you're working. Make presenter. Here you go. You are now the presenter on Go2.
Okay.
You're live. You're good.
Yeah, so this is the euro-dollar chart daily. We are lightly positioned on the long side on the discount, so there is a 5 waves down in A. We are looking for 335 and a flat correction in B for now. On the smaller time frame, we are looking this as a leading diagonal.
Okay.
And I would not like this to push much lower. So I'm start to questioning a little bit, is this the right structure? And I need to see dollar sell-off pretty soon. I also have an alternate count. As you know, the market is predicting a rate cut almost 100% at the...
Yeah, last time I checked it was 90%.
Yeah. So I don't know if this is the pre-weekend kind of a bonanza, but we will see. We are positioned long on the New Zealand Japanese yen, and this trade is working fine now. We are expecting one more move up. We entered here at 70.68 on a nice 5 waves up and a pullback down in flat. We have a orange wave 3 now, pullback in 4, and now we are expecting one more move up to cover this gap and close this trade. Also, we have a longs on a New Zealand dollar.
Yep.
And here also we are expecting a small pullback in a smaller degree, wave 2, and then we are ready to go on the more upside. So as I look Aussie dollar...
I was just going to say, what's the relationship between New Zealand and Aussie right now? Because that's going to be a nice proxy. Australia is a nice proxy for what's happening in China. So are you seeing the same strength in Aussie as we are in Kiwi?
Actually, Reserve Bank of Australia cut rate again last night.
Oh, they did?
Yeah,
Wow.
Now they're at 1%. So it's a third rate cut, one following the other. As you can see, Aussie is moving up. So I still expect to see a C wave down, but in general, I'm looking Aussie higher.
Okay, good.
So in this wave count. So I'm looking 0.74 zone.
Okay, very good, very good. Can you, show me Aussie, New Zealand. Okay, so okay, New Zealand's actually a little stronger than Aussie in there. Interesting. Okay.
Yeah, I'm looking on
on
a longer time frame that New Zealand outperforms Aussie based on discount. So I think that we are still in the downtrend.
Okay.
I see a 5 wave down here in A, triangle in B, and then I expect another 5 wave move down in a blue wave C.
Is clearly outpacing. And guys, the takeaway for you stock traders, don't dismiss the Forex stuff. Like, FX is a great, I think, leading indicator to what equities and commodities are doing. The first thing that Alex showed was New Zealand against the yen. If the yen is being sold, global wealth managers are moving out of the safety trade and into the risk trade, trying to make a return. New Zealand, Australia, Norway, these are commodity-rich countries, and especially with Australia and the proximity to China, and they do so much trade. It's indicative of how they're doing, and obviously China is really the driver of our Western equity markets right now. So what's happening in FX is really, it's not. FX is really starting to wake up and play more of a role in the direction of our equity markets. So don't dismiss this if you're only a stock trader. It's really important to incorporate it in. So, Alex, from there, let's leave that. We just threw a lot at him, which is really good. Got a couple people here asking about Bitcoin. Can you bring that up? I mean, just to recap, like, I'm so proud of how these guys are doing on the crypto side. When everyone was calling Bitcoin dead, below 4,000. Alex and Terry were on the bid at like 3,400 in Bitcoin. They missed their entries by $20. It rallied up. And we're doing a marketing piece right now that'll be out on the web to show. They tried to short initially into 12,000, got stopped out at 12.6, reshorted into 13,000 or whatever, and made like $2,000, $2,500 on the short side on Bitcoin. As soon as everybody was proclaiming that the low was in and Bitcoin was going to explode, those guys were in front of it and shorted it. And how much profit did you guys make on that trade?
We were short from 13,100, and we took profits at 10,456. So around 2.5.
You got to look at this, Todd. This is a 5-minute chart too. So.
Oh, that's unbelievable.
Yeah, so currently I think...
Go back to that.
Oh, sorry, I'm going back.
13,001 entry on a perfect ABC blue 2 correction, and you basically caught all of blue 3.
Yeah.
In what, 16 hours?
Yeah, less than 24 hours.
We entered... 24 hours. 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 24
Yeah.
I think it's around 1 day.
All right, beautiful. Show us where Bitcoin is now.
It was a long
Here we
day.
are.
Yeah, I know. You guys are working hard. Yeah. Okay, so we're looking for, okay, C of X.
Yeah, because we mentioned that in the members webinar yesterday, that I don't think the Bitcoin will push through this trend line.
Okay,
And I was assuming we are going to go in an X wave.
got it. Perfect.
So I'm looking this for an X ABC down. So as long as the markets now starts to buy Bitcoin, it is possible that here at this point, whereas the previous B wave, we just form in 3 waves up in an X wave and roll over lower.
Got it. Got it.
So
Yeah, you're looking
I'm
for a fall
prepared
rally.
here.
Okay, perfect. Let's leave it there. I don't want to give too much away, guys. Definitely check out Alex and Terry on the crypto side of it, the analysis, as well as the Forex if you trade either. But good job, guys. Well
Thanks.
done. So let's talk about a couple stock trades here. Let me just check the comments. If you guys have any questions, comments. Yeah, Ziad, I'm going to come out of gold. It's not, though. It's not, though. Let's see. Let's talk about a couple setups, and then I'm going to bring Terry in here in just a second. There's a few stock setups that I'd like to bring to your attention, and I think, here's one thing. You guys were asking about Tesla. All right, so we're trading what? Last I looked, we were 241 in the pre-market. If the top is trillion in Tesla, this must be the count. Let me get off a daily, even go to a weekly in Tesla. Okay, if you do have a 5-wave move from IPO, and we're about to sell off down into support, down into 176, one area, we really need to be breaking that and get down towards the old lows from the wave 4 at 140 area. The problem as we drill down in this count is we are tracking it impulsively, meaning there's 1, 2, 3. I was looking at a wave 4. We tried to short it, stopped ourselves out, but we're pressing. Now we're 240 in the pre-market. If you start pressing more than 240 and you go 253 bid, 254, this count is invalid. MotiveWave is going to yell at me if I put wave 4 there. There we go. And you've really got to consider that this is a completed correction in Tesla. It's really hard to be short in here. And that's why I'm like, just shut the news off. I don't want to hear about it. And just trade the technicals. And one thing that I'll put in front of you guys, a lot of Tesla fundamental bears are going to hate me for this. But you got to just keep it simple and trade what you see and not what you think or hope. This could be a massive, huge running flat, which is a very strong corrective pattern that usually precedes something much stronger. It's not a fundamental statement on the company. If this company is in such bad fundamental shape, why have we sold off just less than 20 to 30% of the rally that it's put on since 2010? Something is happening. The market is ultimately smarter than you. The market knows what you don't know, and none of us know what Tesla is doing. The market is giving it a bid. I don't know what it is, but this is not a weak pattern right now, especially if we break through that 255 mark. And at that point, it's going to be really hard to make a bear case on Tesla. Okay? I hate Tesla too. I'm totally with you. The stock drives me nuts. I'm so tired of hearing about it. All right, so that's Tesla. A couple actionable trades. Listen, I just was on CNBC just talking about Netflix and Disney. We're actually starting to see, check this out. Check this out. We're starting to see on Disney, obviously this is the streaming wars. We just added Netflix to our portfolio. And this down here, before I jump into that, we have a potential third wave breakout happening in Netflix. Obviously the broader concerns about the indexes, the Nasdaq kind of hesitating below 8,000, that needs to be resolved. But But if you look at Netflix relative to Disney, look at this. This is the relative strength of Netflix to Disney. This guy has come up off the lows, and this rally since June is starting to want to point higher, meaning Netflix is actually outperforming Disney just on the rally over the last couple weeks from June 14th. So that's interesting. I mean, Disney longer term chart looks better, but the strength of the move right here is outperforming Disney, and it's in a position where we could be in a third wave. So Netflix is something, as I mentioned, we added to our portfolio, and we're about ready to get leveraged on the option side with our members in Netflix. Now, that's not to disparage the Disney account. It still looks extremely good. If you go, here from 2019, a beautiful looking chart. I also don't mind being long Disney with the options, kind of a nice little inverse, sort of a cup and handle IBD pattern continuation, looking to get above 143. There's no reason Disney shouldn't be able to print 150 or 160, but my point is, again, the rally that we've seen here just over the last couple weeks this rally has been underperforming Netflix, and I find that very interesting. So just keep that in mind. Both look good, but Netflix might be starting to get the edge. And again, what's the market discounting? I did a trade yesterday that will be coming out with our members. We're going to execute this trade live in the member webinar, which starts in 40 minutes. And Exact Sciences. Okay, this is a trade that was brought to me by my partner that I work with at Elliott Wave International, Jeff Kennedy. We do a joint video for our members every week where he's a very good Elliotician. He brings an Elliott Wave calendar and I trade it with live capital. So I filmed the video yesterday. We're going to be executing with our members today. But Exact Sciences is looking like something that we could begin to see the final parts of a green wave 3 right there. So green 3 should have room up to like 150 area, and we're going to be executing a specific options trade in Exact Sciences. I mean, this stock has been a beast. So we're finally getting to the point where we can start to bring that in. So from here, guys, I'm going to bring Terry in. He's going to walk you through this kind of mystery stock that we've been talking about. He's doing some fine work that I am going to make you the presenter. Are you already the presenter? I think you are. Where did my GoToWebinar go? Here we go. Terry, it's all you.
All right. So I was strolling through the stocks one day, and that's not meant to be a rhyme, but it's
I was going to say, where do you go with that
something
one?
caught my attention. So like we talked about earlier, the Nasdaq is not made an all-time high, not really penetrating, but and I think there's a selective market going on. So I think there are certain selective stocks that are doing rather well. This is Oracle. Oracle is a big name tech stock, been around since the dot-com boom back in the early 90s and before. Big database company, and but what caught my attention here is taking a look at this change that we went through from 2017 through 2019, where all of this looks highly corrective. Wouldn't you agree, Todd? It's very choppy,
Very
overlaps and everything. Now, starting after the December bottom, we've obviously been pushing very nice and cleanly up in what appears to me a return to impulsive behavior. So you could throw the instrument overlay, the Nasdaq. Let's see if we can do this. Nasdaq. And there is let's get this aligned a little bit and change the color on it so that it shows up. It appears to me that Oracle is one of the tech stocks that's probably outperforming in the Nasdaq. Okay, so I think also another way of doing a comparison is an instrument ratio, and you can see this upturn, this uptick here. So Oracle is outperforming S&P as well.
Yeah.
So I had a bit of a challenge. I didn't really do a full analysis, wave count analysis. What I rather just did is took a look at this this big corrective area here, and another big corrective area back here. And I said, well, let me start a wave count back here. I know that's not necessarily the right way to do it, especially if we zoom out and take a look at what Oracle has done all the way back since about 2002 lows. Now, I did try to start making a wave count back here, Todd.
Yep.
And I started running into some problems with some overlap that was hitting me here.
Yeah, I see.
So rather than spend too much time with that, maybe we're in a smaller degree wave or whatever. But if we get down into the smaller time frames, and we certainly know that this was an end of some type of major correction. So now we've got some big push going on here.
Yeah.
So I thought I'd just leave that for you guys and let you guys take a look at that, and not necessarily going to say that this is a correct count. Oops, did something wrong there. Let's see. Even if this is an A, B, well, why isn't that not drawing?
Just bring the visibility in. There you go.
There we go. A, B, C.
Yep.
I guess I got that on there twice. Or a 1, 2. I think you've got to push higher, and you can do a 3v1, and you should be able to find at least ratio 3v1.
Yep.
Even a push all the way up to 65. That's what I'm seeing here, Todd.
Yep. No,
what are your comments and thoughts?
Nothing. I mean, that wave 2 looks a little bit more like that wave 2 fulfills the minimum expectations, so it looks to be about a 38% retracement, right? So I have no, look at that. Oh, right, the penny.
You got a good eye, Todd.
I've been looking at,
you know, usually when you're just having a moderate run, you're going to have a pull back down, and back down into here.
Yeah.
This is probably signaling to me that there's some strength in this stock, and then if you can diagnose or decompose this next wave, and potentially you got more work going on right now. Look at that gap there, right? Isn't that nice?
And if that happens in a third wave position, that starts to suggest you're on the right track. So good work there. Very good work.
Good.
There.
We'll put this on our list, short list, and we'll get a trade or two out of it.
Beautiful. Good job. All right, guys. So let's see here. If you're enjoying the video here on YouTube, go ahead and click that thumbs up if you don't mind. Let YouTube know you like the team here, like the work. Throw some comments in below. The other thing, comments, questions, insults, throw them all in there below. The other thing I want to mention is we're doing a webinar on July 10th. Okay, this is going to be a kind of a look into the charting software we use, which is MotiveWave, which is kind of the way we organize our analysis. Start to kind of really get focused on what we're doing, and organization with the Elliott Wave is extremely important, and that's what shortens the learning curve. So we're going to do an introductory webinar on how we use the MotiveWave software, and that's going to be on July 10th. So what you can do is go to this website right here. Let me just flip back to my desktop. Go to this website right here, tradinganalysis.com/summer waves. Okay, and what you're going to see there is just a sign up page for this webinar, which is going to be July 10th, right, Andy? July 10th at 8 p.m. Yep. Trading Analysis and MotiveWave present MotiveWave My Way, kind of a little Frank Sinatra play there, training with the world's most advanced Elliott Wave software. I'm going to be there. Tony Lindsay, who's the developer of MotiveWave, will be there, and of course Alex and Terry will be there as well. So it's next week, July 10th, 8 p.m. Just sign up, and we'll get the link to you to access. So it's going to be educational. It's going to be how we take this MotiveWave software across our monitors and how we organize it. Elliott, you know, there's a few different ways to chop up a price chart with Elliott, but organization, strategy, knowing what to look for, cut the clutter, you know, have a strategy in terms of looking at all these wave counts and how does it kind of direct your trading. MotiveWave has made the difference, all the difference for us and really my business. My business is a lot more successful because we can look at more markets, be more organized, with MotiveWave. So we work very closely with these guys at MotiveWave. So we're really happy to put this webinar on Wednesday, July 10th at 8 p.m. So definitely sign up. Okay. Aside from that, guys, again, hit that thumbs up on the YouTube. Let us know what you'd like to see in future videos. Joe, the intern, what's up, man?
What's going on?
What's Joe working on this week?
Huh? I can hear you, Terry.
I said, what is Joe working on this week?
Do you guys see that right there? Hold on, let me switch this. Let me get out of the way. Joe, what are we working on today?
We're going to build a set.
We're building a set. You guys see this right here? There's a lot of wood and 2x4s. We're going to build a set for you, and this might be the last time that we do this MotiveWave or this Wednesday webinar here, and we're going to have like a full-on Jim Cramer Mad Money set at the end of today, right, Joe the intern?
Right.
Did you bring a hammer like I asked you to?
I did.
Yes! Good job, dude. So anyways, yeah, that's why we look like you know, aside from supporting, and where's our cocktail can? We're releasing not the Moscow Mule, the American Mule, which is made with bourbon from our Upstate Distilling Company. So we got a lot going on. Happy 4th, guys. Throw a thumbs up in that video, and hopefully you enjoyed it. And maybe we'll be on our new set next week. Terry and Alex, thanks, guys. I'll see you on the member webinar.
See you.
All right, guys.
Bye-bye.
Happy 4th of July.
Absolutely.